If you are an investor on Debitum, you can hardly ignore the assets by the Latvian Forest Development Fund in the past few weeks. Considering that investors have already funded more than 7 million euros in just 3 months, indicates a strong demand from investor side. So the question is, how much substance is actually behind Debitum's latest edition, which promotes investments in the Latvian forestry sector with returns of up to 14.5%. To uncover the full potential of the Latvian Forest Development Fund, we will use today's video to take a very detailed and close look at various elements. This includes, for instance, the ownership structure, the business model, the financial situation, and all the risks that you need to be aware of before making an investment decision. So, let's get started. For simplicity reasons, I will sometimes refer to the Latvian Forest Development Fund as LFDF. In a nutshell, the LFDF is a forestry-focused investment fund based in Latvia, founded in April 2023. The fund's business model is based on acquiring forest land in Latvia, managing it, and later selling it at a profit. Since February this year, investors on Debitum have now the opportunity to take part in the acquisition of forestry land while being offered interest rates of up to 14.5% with loan terms ranging from 3 to 24 months. The legal name of the fund is Latvijas Meža Attīstības Fund, which is a limited liability company that was registered in the Latvian Commercial Register on April 6, 2023. This company is in turn owned by the Latvian entity Intelligent Innovations, whose beneficial owner is Latvian Jānis Upenīks. He is considered to be an experienced businessman in the Latvian forestry sector. Previously, he served as a board member of the Bono Group, a Latvian wood processing company that has already shown presence on the Debitum marketplace. Next up, let's take a closer look at the business and monetization model. LFDF specializes in acquiring and upgrading undervalued forest land. These assets are then transformed into high-yield investments through effective management and sustainable practices. LFDF is therefore acting as an intermediary between independent forest owners and large institutional buyers such as IKEA. The conversion of forest land into institutional-grade assets involves usually the following steps. First, the fund acquires land from owners who typically possess between 10 to 15 hectares. The fund then takes over the full management and utilization of the area. This includes timber harvesting, export, land optimization, and legal preparation for resale. In the final step, LFDF consolidates these assets into a structured portfolio, allowing institutional investors to acquire large-scale forestry investments through a single transaction. With this particular business model in place, the fund was able to generate a revenue of 3.9 million euros last year, which primarily come from two main sources of income. The sale of forest land with a profit margin accounted for 3.38 million euros. In addition to reselling to institutional investors, some individual plots are also sold to local farmers, as many forest areas include sections of agricultural land. Another source of revenue comes from the sale of timber and forestry products, which accounted for €500,000 in revenue last year. By selling harvested timber, the fund can meet the growing demand in construction and furniture production, with sales mainly going to customers in the Baltics and Scandinavia. In addition, lower quality wood is converted into biomass and pulpwood, which are important raw materials for heating and industrial processes in Europe. Thanks to these diverse utilization options, the fund is able to generate regular cash flows throughout the entire investment cycle. Let's take a look at LFDF's financial situation and its funding strategy. At the end of April, the financial figures for the previous year have been submitted, showing that the fund was already able to generate a profit of €70,000 in only its second fiscal year. In addition, equity stands at €1.5 million, providing sufficient reserves to support further growth. Since the acquisition of forest land requires a lot of capital, the fund uses short-term loans to close acquisitions more quickly before securing long-term refinancing through bank loans or direct investors. Accordingly, the loans offered on Debitum have terms ranging from 3 to 24 months. An interesting observation can also be found in the fund's prospectus regarding its strict capital intake rules, which are directly tied to the value of the assets recorded on the balance sheet. This means the fund is not allowed to raise more capital than it currently holds in tangible assets. The fund's ability to acquire new capital is therefore capped by its existing asset base, resulting in a conservative asset-backed financial structure. Let's talk about the risk elements and what investors should pay attention to. The loans via Debitum are secured by a first-rank mortgage on the respective forest plots. In the event of a liquidation or restructuring, this structure ensures that Debitum investors have senior claims on the pledged collateral. Beyond that, there are structural protection mechanisms in place for investors. Most importantly, the already mentioned financing structure that ensures the investment risk is fully backed by assets. In addition, diversified income streams from timber harvesting, land sale, and biomass production help to ensure a steady cash flow for repayments. From my personal perspective, I only see two different risk levels. The first one are the industry-specific risks. Despite the presence of major players in the market, the sale of forest land can take several months, which may lead to a certain degree of illiquidity. In addition, fluctuation in timber prices can negatively impact the fund's cash flow situation. Political interventions or new environmental regulations can also present a risk that should be taken into account. Also, the corporate risk should be considered as well. Financially, there don't seem to be any immediate issues. The fund is debt-free, profitable, and has a controlled financing structure. However, the fund is still a young company with a limited history, which carries a certain operational risk. In particular, the dependency on a few key individuals should be noted. And finally, let's come to a conclusion. Is it worth it to invest in forestry loans? Yes or no? First of all, LFDF offers an exciting and alternative investment opportunity in the peer-to-peer market. The combination of real collateral, transparent business model, and attractive interest rates makes the offer very interesting, especially for investors looking for shorter terms and asset-backed loans. However, it is important to note that the forestry niche is complex and not directly comparable to traditional consumer or real estate loans. For experienced investors with a stronger risk appetite, these loans are definitely worth considering. Personally, I will start off with a small exposure in LFDF loans, and I will continue to track this topic on this channel. What is your personal take on forestry loans? Please share your feedback in the comment section below. If you enjoyed this video, then please give it a like and consider subscribing to this channel to not miss out on any of my future videos. Thanks for watching, and I'll see you guys in the next video. So long. Bye bye.